Okay, well, thanks for joining us for our final session of our Crop Talk. It looks like we have about 2 or 3 more minutes before noon, so we don't want to stop, or we don't want to start without allowing some people to hop on. Again, we have really appreciated you joining us for starting out a 6-week series for our Crop Talk, and we added a bonus session for you today. And I'm glad that our speaker was able to join us with all the volatility in the markets. So I'm sure that you guys have lots of questions. So we're just going to hang on here for a couple minutes and let some more people join us. So just kind of hang tight here. And like I said, we really appreciate you. If you missed some of the other sessions and are looking to find some of those sessions, you can either go to the Northwest Extension Agronomy page, and all of those are listed there, are the recordings. Oh, I guess I need to introduce myself first. My name is Sandra Wick. I'm the crop production agent with the Post-Rock Extension District. So like I was saying, all the recordings along with the handouts are posted on the Northwest Extension page. If you go to the Northwest Extension main page, and then on the left, go to program areas and you go to crops, and then the Crop Talk link to the rest of the information should be that top one. If you click on that, then everything you can see, there's the dates there. And then if you keep scrolling for a little bit, there's recordings and the handouts. So make sure if you did miss those are posted. Some of the other counties and districts, and I know we do at Post-Rock District, we also have those resources posted on our webpage as well. So you might check also your local offices and see if they have it posted as well. Okay, we'll give them about another minute. I have 11:59. Before we get started here, we had some other meetings as well. During the winter, because that's when Extension has all of our winter educational programs. We had some regional fertility meetings, and we had some regional weed meetings. So those are also posted on various websites. And I think they're on the Northwest Agronomy website, but I know that they're posted on our Post-Rock Extension District Crops page. So we have the fertility meeting and the weed meeting. So if you're interested in any of those, along with the handouts, we have those available for you too. So I think we're going to go on and get started here. Again, thanks for joining us. Today is the final session of our 2022 virtual K-State Crop Talk for North Central and Northwest producers, and actually other producers around the state as well. Again, we had this 6-week series scheduled, and then we added a bonus session today. So I'll make a few introduction slides here, and then we'll keep rolling. So as you know, it takes a village or a team behind all of us in order to make these sessions happen. So I'm going to go through these, and hopefully you will notice some of your local agents in your area. We have Emily Benningsdorf from Thomas County. We have Aaron Highland from Rollins County. We have Keith Van Skyke from the Twin Creeks Extension District. We have Cody Miller from Phillips Rooks. Myself, we have Craig Dinkle, who is the Crops and Horticulture Agent from Midway. We have Stacy Campbell from the Cottonwood District. We have Kelsey Worth from the Golden Prairie District. And finally, we have Jeannie Falk Jones from the Sunflower District. So we really would like to thank all of our team members for making this happen. And this is the second year that we've done this, and we have some really good comments from you all out there as well to help us keep going. Okay, the handouts are available, and you should have been emailed this morning. The handouts for the session today, if you did not get those printed off, if somebody will put this message or this link in the chat box, if you will go to www.northwest.kstate.edu/events, The handout that Dan is going to be using this morning is for you, that you can run off and take some notes if you need to.
Sandra, I'm going to pause you just a second. So,
Okay.
guys, this is Jeannie Falk-Jones. So I'm the one who is tasked with posting the handouts. I am working on that right now. So as soon as I get them posted, I'll put a note in the chat box. But I'm having a couple of technical things not agreeing right now. So I have almost got them. So hang with me just a few more minutes and then we'll have them if you guys are wanting them to take notes today. Sorry about that, Sandra.
Nope, that's great. So thanks for that update, Jeannie. So they won't be on there looking for them and they can't find them. So yeah, they will be there shortly.
Yeah, give me just a couple more minutes. We've almost got it.
Okay, all righty. If you need to ask some questions, and we hope that maybe you do have some questions on your mind, because this is a time to ask the expert, our ag economist here. If you're using Zoom, you can see down in the lower section of your screen, there's a Q&A box. So we would prefer, if you have any questions, to type it in the Q&A box, and you simply just click on that Q&A link down the bottom, or that button, and then simply type your questions in. And we'll probably leave those till the end, if that's okay with you, Dan. Since we only have an hour presentation, it works a little bit easier unless it just fits right in or something. If you're watching on YouTube Live, which there's several of you that are doing that as well, you can simply type your question into the comment box, but you have to understand too that you need to create an account, which is very, very simple to do that as well. And then you can just simply type in your questions. We have extension agents that are monitoring the YouTube. So then we'll direct that question to Dan. So don't be worried, we will get the question to our speaker, so that will be answered. Or if you're just having a difficult time, you can't really find the Q&A, or you don't know how to create your account, you can simply just email any of our agents here online. I do have Jeannie Falk-Jones's email address up there, so if you want to email her, or if you know your local extension agent address, you can do that as well. There's also a chat box at the bottom there, and that is a circle in blue. If you have any technical questions, simply if you can't hear us, if your chat doesn't work, or if your Q&A doesn't work, just simply type those in the chat box. Also, our speaker is going to be engaging us, the audience, this morning, and he's going to be asking you a few questions along the way. So when he does, if you could just type those in the chat box, that would be great. And then we'll get some input from you guys as well during our presentation. Okay, those of you that would like to have some CCA credit, if you could email Jeannie, this has been the same that we've done all through our series here. Just email Jeannie at jfalkjones@ksu.edu right now. And then also at the end, when you do email Jeannie, if you would include your name and your CCA number, that will really help us out a lot when we try to process this information and to get it to the right people, so you will get credit. Okay, so I think that's all the housekeeping. Like I said, we are fortunate to have Dr. Dan OBrien. He is our K-State Northwest ag economist, and he is one of the experts, I guess you could say, at the grain markets, and that is his responsibility for K-State Research and Extension. So Dan's main focus, of course, is applied research in the areas of course, grain, along with bioenergy market analysis with crops such as wheat, feed grains, oil seeds, and even the ethanol supply and demand and prices. So he's going to be going through those things as well. But he's also been working in the areas of irrigated and dry land cropping systems related to natural resource issues in Western Kansas and or in Northwest Kansas. He also works with quite a few agriculture audiences and extension agents on farmland leasing and cropping enterprise budgets, which will kind of give you profitability or no profitability, and those are listed on the Ag Manager site as well. So I'm going to stop sharing here, Dan, so you can get your slides up.
Okay.
Also, we just resolved the handout issue. They are available. I just put the link in the chat box. I'll throw it onto YouTube also. So yes, you guys can go print off Dan's handouts to take notes, because I'm sure that there are going to be a lot of things that we're going to want to make notes on as Dan's going through this presentation today. So yes, just a heads up, the handouts are there if you would like to go get them.
Okay, it looks like, Dan, you are ready to go.
Sounds good. Well, I appreciate, make sure, can you, it's always good to make sure you can actually hear me. So I'm unmuted and ready to go, right?
Yep, you are good to go, Dan.
Good. Well, these are momentous and dynamic times to be talking about grain markets. Of course, when you look at what's happened here of late, we see closes on Friday, and there are changes even today from this. Corn's down, soybean sideways somewhat, wheat up, but these are just times of great volatility. You see that again on Friday, it's closed across the board. You see a lot of negatives in terms of carries per month. On the corn side, you look at of course the March contract just about off the board. It's in its delivery period. So the markets are paying attention to the May contract. From May to July, we have on a per month basis 16-cent spread, so about 33, 34 between those contracts, and you just keep moving lower from July 728 to September 677. D's corn, new crop corn that we would be aiming new crop forward contracts at or pricing off of 655, 652 for March and on down. So you've got especially in the latter part of this year, some sizable drops. These are very much inverted markets, giving the signal that if a person has grain to sell, at least from the futures point of view, they're indicating that they want it now. Not to store it. There's no reward there for storage in the corn futures. Very similar situation in soybean futures. You look at from May to July, on again a drop from 1676 to 1651, and then to August, and then to September. That it's kind of amazing to see from July to August, 41-cent drop. From August to September, 76-cent drop, and that on a per month basis. Again, those are back-to-back futures contracts, futures contract months. November down 21 cents per month from the September contract, and it just goes on. And then for wheat, the real fireworks in the market has, of course, come from wheat and concerns about the adequacy of wheat supplies for the world market because of what's happening over in Ukraine, between Ukraine and Russia. So really, of the markets you see here, the wheat market, number one, corn market, number two, are affected. You do see, again, we had a webinar seminar on Friday where we looked at how sunflowers are impacted and how that rolls over and impacts the soybean oil complex in particular. So have a lot of these markets are affected by not just normal supply demand factors, but now this real change in the market that's come about because of market prospects that's come around because of the Ukraine-Russia war. So our focus will be to talk about supply demand issues in the U.S. and world. We've got generally tight stocks and higher prices. Some of that's fear, some of that's fundamental supply demand, but it's all in play. And then I wanted to look at corn, sorghum, wheat, and soybeans in order as we go through this. But first, talk about the crop prospects. You have to look at moisture, and you can see the U.S. Drought Monitor map, and just in almost all of Kansas, all of Nebraska, a good part of Iowa and on into the upper Midwest, you see dry conditions coming into play. You have the predicted drought, the soil moisture anomaly going on into the future. This is projected again. We're on the 14th today, so we're into this already. But projected dryness throughout the western corn belt up into the north central and wet, particularly from where we're at down south here in Kansas, down south into Oklahoma, Texas. Just not good prospects for the wheat crop. And, you know, I don't want to get melodramatic, but it's more than just us getting a good price now that's really at stake. And you're talking with what's happening overseas. There's a lot riding on the adequacy of food supplies for a lot of countries based on whether we have a good wheat crop. So it's a big thing that we find ourselves in the middle of, and quite the momentous time. I would say also, when you look at short term, it'd be the short-term projection over time of moisture. You do see a lot of dryness, quite a bit of dryness in. Again, we're looking at northwest, north central Kansas for these crop talks, and we're in some of the roughest looking parts of the country. So this recent snow that we had gotten, varying from 5 inches to 10 and or more. You know what? There's hardly a farmer that won't take that. We live to fight another day, which you can see up into Nebraska. Some important parts of that are dry. Down southwest Kansas, dry down there also. So challenges upon challenges. And then you see from the longer term view that this whole region has different pockets that are dry. Now, from where we're sitting in northwest Kansas, we don't consider ourselves just wonderful in terms of moisture. Although, again, up in Cheyenne and Rawlins County, there's a dry spot just across the border into eastern Colorado, just a tough, dry area. And from where we're at in north central Kansas, heading on to the east, some dryness there too. So, and those are long-term, rougher situations. Would talk about the part of what's been driving the market aside from Ukraine, Russia, is a lot of dryness and reduced crop prospects for soybeans and first crop corn down in South America, Argentina, Brazil, Paraguay, other smaller countries, all involved in that. We talk about the prospects for the wheat market, and you look up into Canada for the spring wheat crop, and it's not just sterling up there either in terms of moisture. You can see again see the scale on the bottom. The redder, browner, darker you get, the drier you are. Some dryness emerging in in Western Australia and Spain, and France, parts of Europe also are dry. So just not just a tremendous idyllic Garden of Eden type of growing conditions around the world. We have some production problems, much less these other issues we're dealing with. So anticipating what type of crop acres that we may have this year, and the USDA has come out here recently with their Ag Outlook Forum numbers, and for wheat, they're projecting about 48 million acres. To have that up a little bit. There's kind of an argument going on whether their assumptions in the spring wheat area, given the dryness we've seen up there and great prices for other crops, whether we'll actually see an increase up in the the Dakotas and Montana. So we'll see. Soybeans projected to be up a little bit, 88 million acres, about 0.9% up from 87.2 the year before. Corn projected to be 92 million, down about 1.5% from about 93.4. Sorghum down about 11%. In essence, about 800,000 acres, 6.5 million acres, 7.3 a year ago. And then cotton projected to be up somewhat based on just tremendous cotton markets in the US and the world. But the question I would have is, I know what these projections are, but we've had such volatility, such tremendous pricing opportunities. I guess farmers will vote with their planters with regard to what they think prospects are for crops in this coming year. And I would not be surprised if if strong prices for these crops end up and influence what actually happens once we get out in the field, if we keep going, if we have seed, if we have fertilizer, and again, this CropTalk series has had at least a couple of sessions talking about fertilizer availability and efficient use given the high prices. So I think it's an open question with regard to where we go now, given what we've experienced in the last 2 or 3 weeks in the markets. It's probably changed people's expectations of what it has changed for some, probably their expectations of whether it be the most profitable crop to grow. So let's take a look at corn and sorghum markets. So for corn, the USDA projected at their Outlook conference on February 25th, 26th, for this coming marketing year, not the one we're in, but for the next one, $5 a bushel. And it's kind of an open question, given all that's happened. Is that still where we're going? I'll come back to that in just a second. But they're not accounting for any crop problems. They say right up front, we assume normal conditions all the way through it. And so they're projecting a record high crop, 15.24 billion bushels, up from last year. And on top of that, record high yields of 181, which I have at least a question about, given our fertilizer issues for corn. It's just I wonder about that. Ending stocks, about 1.9, 1.85, 1.9 billion bushels, up from about 1.4 last year. So you've got to get the 1.24 billion bushel crop to see stocks increase like that. If you don't get it, then stocks won't increase. Stocks to use with those numbers for the USDA, about 12.6% ending stocks to total usage, up from just under 10% this last year. Again, there's that farm price projected to be $5. And 2 years ago it was $4.53 a bushel for the US. This year we're in projected to be $5.65. So what do the futures say? If you look at I take, there's a way to take the futures prices, extend them out into this market year we're in, which ends August 31st. Look at the next one also, starting September 1, going to that August through August of 2023. Using futures and then assumptions about basis, basically taking current basis levels, extending them forward. And you ask the question, well, what do the futures say about the markets? Well, the USDA is projecting about 565, I believe. Yeah, let's see here. They're projecting 565 for corn. The futures, even for this marketing year, given where we're at currently, at about 592. So again, about 27 cents higher. But for that next marketing year, they also come out with surprisingly the exact same number, 592. So that 592, arguably 90 cents to $1 higher than the USDA's conservative forecast. I guess that just shows the uncertainty about where things are going. The USDA is planning on great crops, and that we won't be plagued by volatility and problems in the next several months from here through November. And that seems to be kind of a heroic assumption at the moment. So just wanted to show you quickly, you can see that the rally we've had in the May corn contract, we were hanging around at what we thought were tremendous prices, and they were historically about 640 thereabouts. And this recent run up has taken us up to over 775 to about 780 thereabouts, 785. Traded on Friday at 762. Last I looked, we were down 30 cents. Down 30 cents, you're just in the trading range. We're so high right now that's just volatility. You can see 30 cents off 762. That's just where we've been trading at here of late. And I wanted to show you this. This is a continuous chart of corn futures coming through time. You add the lead contract always through, and you've got some technical signals here. We could come back and talk about those later, but I try to watch relative strength indices as an indicator of market momentum. When they're at 50, at a 50 rating, we're going sideways to market. When they're over 70, generally acknowledged as, gosh, we're really bullish. And right now they're at 77. So strong uptrends in corn. Volatility's increased sharply, standard deviations up. The rate of change The latest rate of change these are weekly futures, up 28.5% from week to week. From most recent set of numbers relative to the recent past. So tremendous volatility, strong runs higher, and really the question sure can be asked without question. Where does this go? And if it doesn't stay high, what would weaken it? We can talk about that later. Well, I think you're looking at, let's answer that now. Or you're looking at seasonal factors. Do we get the crop in? What do the acres look like? Do we see any problems coming on because of lack of as much fertility, as much nitrogen as we normally put on? It'd be quite a year to have any crop problems coming into 2022. So we're hoping, for the sake of world food supplies, we're hoping that doesn't happen. I do want to look at current cash prices. I checked this Salina number 3 times to make sure I wasn't messing up. But for some reason, that's Salina, Kansas. The most recent bids on at the end of on Friday of last week, you had a 709 cash bid, which is a great bid, but the elevators, main terminals we were looking at were sort of out of the corn market, or at least they dropped their bid 54 or under, as opposed to the Colby bid at even money with the futures. So and for new crop, but their new crop bids were identical, both 20 under. So take that as it is. At times, elevators on certain days, they don't want to take in corn, but yet they're willing to give forward contracts out there. And then you come into this issue. It's just occurring in our markets. I'm going to show the Midland Marketing out of Kansas, Cargill out of Salina. You see the basis bids dropped way off here, coinciding with the strong rallies and run-ups that we've seen in the futures. There, you saw that for Hayes, same deal, just a little different scale for Salina. So again, basis widened out on Tuesday, March 8th for a specific set of reasons. I'm going to try to talk about those at the very end here. Did want to show you that ethanol plant still running pretty strong, 755 in Kansas. And it used to be that used to be in recent months, the Kansas ethanol price was by far the strongest, 20, 30 cents above anybody else. But now you look at that Illinois price and Western Iowa price. And you've got other parts of the country, particularly what's noticeable to me is the Illinois situation, Illinois, Indiana, near urban centers, as gasoline prices have run higher, you can see that ethanol prices run up, and you've got some demand issues coming into play. Exports generally pretty bullish. So that's the question. Well, if the 4th largest corn exporter in the world, Ukraine, is out of the market, will that affect U.S. exports? Most recent U.S. numbers indicated, well, yeah, something's affecting it very positively. At 69 million bushels, need a pace of about 54 or 55, meet the USDA's projection in March. And that March projection was raised 75 million bushels. So it does seem that in the world corn market on exports, that there's carryover impact for U.S. corn exports. And prospects down the line, so there's both shipments and forward sales were about 79% of the way to the USDA's 2.5 billion projection, and about only half of the marketing are complete. So that number, at this pace, that number could go higher, the 2.5 billion bushels, and that just tightens up U.S. corn stocks. Do you want to look at the world situation a little bit? You can see that world ending stocks projected to be 301 million bushels. And normally, for a talk in north central northwest Kansas, wouldn't be paying that much attention to this. It's not that big of it's a big issue, but we've got other more localized factors that come into play. But you look at this at 301, and then you try to figure out what happens if Ukraine cannot participate in the world market in 2022-23 in that next marketing year. So keep a snapshot of this in mind, and then look at this. This is what happens if you take Ukraine production out if you assume usage is unchanged in the world, if exports drop by the amount that Ukraine is not in the market for corn, and then ending stocks from 301 million metric tons down to 269. Ending stocks to use would drop to a 10-year low. You see at 269. We've been at 269 before, but that was in a year when we had about 20% less usage. So the world usage of corn has grown, and to drop back to there is, let's just say it's quote friendly to prices. And the as we talked about on Friday in the AgriCon webinar, the game or the issue will be if the world's not comfortable with that low of stocks, then it's got to ration usage. For every 10 million bushels taken off of usage in the world, you increase ending stocks. So what's the world comfortable with in terms of usage, and how much will we have to ration to get through this situation if Ukraine can't come through? And so 565 for this marketing year, if that holds, where do we go next year? Generally, if you cut back stocks to use, and you tend to go up and to the left on a chart like this, a little tighter stocks, higher price, but it's not a generally one-to-one thing. So it looks like off of this view from the world point of view, and taking account for currencies, that's about 50 cents higher. So the 565 up to about 615. I want to take a look at grain sorghum, and just note that grain sorghum cash bids in Colby a little weaker. In Salina, grain sorghum cash bids a little stronger, but that's not saying much given the weakness of corn there. New crop bids identical for grain sorghum and corn in Salina, stronger for grain sorghum in Colby. So who's involved in these markets as exporters? When do they have trains to fill? What's those are the factors and issues that I would raise in trying to compare these at different times. And so grain sorghum bids, same drop off here in the most recent week out of Hayes and Salina. So both of them dropped off following the pattern of corn. Grain sorghum exports, they're kind of choppy. They're up and down, but the most recent week, grain sorghum exports pretty strong. 8 million bushels, need about 7.4 to hit the USDA's projection. And so again, you're sitting at about 88% of the year of this USDA's forecast of 310 million bushels, sort of on the books again, part shipped, part bought ahead, and only halfway through the marketing year. So generally bullish for grain sorghum too. Take a look at wheat. For wheat, we have okay stocks and percent stocks to use, but the USDA projected a 680 price out of that Outlook conference, and in fairness to them, a lot has happened since February the 25th, 26th. You can see they're projecting production of wheat up quite a bit, ending stocks up about 80 million, stocks to use up about 4%. There's that 680 farm price that would be down from this year's price of 750. So what do the futures say again? The current futures price is 779. The USDA projecting about 750. So yeah, ballpark, I understand. But the futures for wheat projecting, at least by my numbers, just under $10, and the USDA's projection about 680. But note on that purple line up there that you're reflecting those declining futures. It's a front-loaded marketing year situation in terms of how the futures are viewing what's happening for wheat. Just something to think strongly on. Again, just you can see that rally in the wheat market. This is off the May contract, 1089 close on Friday. It had been up to, in essence, $13. It didn't stay there long, but this is for hard red winter wheat. This is for Chicago wheat. I want to show you, again, very, very similar. Thing about Chicago is they have a lot more volume of traders. That's we don't grow as much soft red winter wheat, but that Chicago contract is where the volume of traders show up to reflect all these things in the world. And note again, RSI over 70%, strong. Volatility jumped two or three times. Rate of change 39%, actually down from 50. So just amazing volatility in the wheat market. Prices. So this issue on wheat, the big run up that happened in the market on Monday, the 7th, was 1 day ahead of the strong widening out of basis by grain elevators the next day on the 8th. That's kind of what it is. And now you see basis for wheat and Colby $1.08 under, new crop bid $1 under. But so Colby's much wider, but whereas Salina, more of a trade oriented location, export oriented location, directly anyway, 33 and 37. So for as much as kind of probably disappointed at Salina corn basis, you've got it, you compare these and you're pretty positive on Salina wheat basis. But again, they're filling trains and much more directly involved in at a frontline location, directly involved in the export market. Note wheat basis. This caused a lot of consternation in the country amongst a whole lot of farmers when they saw what happened in the wheat basis in basically last week. Pretty similar. All that was in Hayes. Here's in Salina. Again, a drop off. So the issue with wheat is we're betting on the come, because we haven't had tremendous wheat exports. There's that 14 million bushels, not a bad pace, but we need 22 million to meet the USDA's projection of 800 million for this market year ending May 31st. But we've been running behind that pace for all but about 1 week in the last several months. That's for all U.S. wheat. Same thing for hard red, 6.7 million, running behind the pace of about 9 that we need. So just thought provoking. So when the wheat market runs up, it's running up based on what it thinks could happen down the road. It's worried about world supplies. It's worried about Ukraine, and what happens if Ukraine's unable to re-engage or even harvest their crops. The wheat crop will be harvested next summer, so there's a long way to go. But their agricultural system's so traumatized. I don't think that's an over extreme word. So traumatized right now in terms of having bids, having trucks, having security to operate. It's a very serious question as to how quickly they can turn that around and come to stability and start to function again. Here's for wheat. Here's where we're at right now. In this current marketing year, small adjustments for wheat. Again, this is a March report. You can see the 6-year low in ending stocks, 281.5. And here in the next chart is by our calculations, what happens if Ukraine cannot participate in 2022-23. At 282. So you drop production, assume usage is world usage about unchanged, exports drop off, and then you see you're down to, this is no small thing to see us down to 244 million metric tons, a 9-year low for stocks to use, and a worried set of countries with regard to having adequate domestic food supplies. So again, the issue is if the world's uncomfortable with 244 million metric tons, then we're going to have to ration some usage. 10 million metric tons off of usage, then it gets to be 254. 20 million off, it's 264. So that's sort of the trade-off that we're in. And so prices for wheat in the U.S. wheat prices adjusted for the U.S. dollar and the relative strength of the U.S. dollar, even with our fears of inflation compared to other world currencies, you can see the relative move that's happened in the value of U.S. wheat on the world market, and this is probably why the value of the dollar, why we're not selling lots of exports yet. But this, I figured out, well, what happens if we drop to 20% stocks to use? And those hypotheticals they have extreme enough outcomes. I did want to put them in a chart. I think there's a lot of rationing that's going to have to happen of usage of wheat in the world to make sure we have adequate supplies going forward. We shall see. Soybeans, tight stocks. The USDA projected 12.75 per bushel, and you can see there you saw those higher acres earlier with higher acres and again more record high yields. Almost 4.5 billion bushels of beans, up from about 4.4 last year. Stocks really pretty tight, 265 million bushels down from this current year. 5-6% stocks to use. That's not 15 or 20. That's 5% down, and that'd be down from this year. Well, and what's happening is Brazil has had enough drought damage in southern Brazil that's hurt their soybean crop tangibly in a significant way. So they're just not going to be able to step into that gap. So their countries will be forced to come to North America to get supplies here once whatever comes out of South America is done. Farm price projection by the USDA of 12.75, down from 13.25 this year. And so what do the futures say? Again, current price, futures oriented price, about 13.14. USDA projected 13.25. So yeah, that's pretty close. For the next year, USDA projected 12.75. Futures seem to be, well, basically about 60 plus cents higher than what the USDA had projected. So we've had rallies in soybeans too, but they've been more, just dryness in South America give us great rallies. But well, as you can see, 1676 was the close on Friday. Tremendous run up, but we had run up as high as about 1760. And again, you can see for soybeans overall continuous chart, all these commodities, as we talk today, they're exhibiting strong upward momentum. The RSIs are all over 70 or at 70. It's just strong markets, all showing volatility. Standard deviations are up. Rate of change is 28-30%. If anything, I guess we'll see if there's a sideways move now in some of this volatility. Do we have a volatility fatigue that'll come in? We'll see. Cash prices for soybeans. You can see in Colby and Salina, again, 15, 16, pretty wide basis in Colby, a lot narrower in Salina. New crop bids, well, basis bids for soybeans out in Northwest Kansas, not a major terminal, are a lot wider at this point in time than in Salina. And but again, you're more near the export center. Downs, can see that soybean basis followed corn basis. In Downs, didn't really have a soybean bid out of Hayes. Not as much out of Salina. Again, it dropped off some, but probably about half of what had happened even in Downs. So again, you're an export terminal, and it makes a big difference. Soybean exports, about 31 million bushels just last week. And that's with the Brazilian crop coming on. Need about 21, 22 to meet the USDA's projection. So at that pace, even at this off time for us, we could see that number for exports go higher. And again, you look at that. So we're 92% of the way shipped or bought to meet the USDA's projection. We're only halfway through the year. So bullish. And a lot's happening on the other side in soybean meal, and particularly soybean oil. Soybean oil gets affected because Ukraine produces about 45% of the world's sunflower oil. So if they're off the market, and people are scrambling for oil as a substitute. And it's either palm oil or soybean oil. They have a drought in the palm oil area over in Thailand and Southeast Asia. So, so soybean oil exports, strong issue, and some of the strength and support for soybeans probably going to come out of the oil complex. And you can see again, strong. They're marking your lags by 4 weeks, so they're about 90% of the way. The USDA's projection, only 42% of the way through the market here. Soybeans, again, Ukraine is a very small soybean producer, less than 1%. They do have an industry. They have plants they crush, but not as much of an issue. You can see it, but even without that, just the dryness in South America was leading us tighter in soybeans also. And you can see the price, $13.25 for the current marketing year. If you tighten that up, well, you see the direction we're heading. So I want to finish up with some, again, a little bit of discussion with the time we have left on basis issues. So we talked about this again Friday early afternoon at another webinar. I want to bring it up again. So spot hard red winter wheat basis bid offers in the Southern Plains, see the main states there, were affected by sharply higher wheat prices, and the adjustment happened on Tuesday of last week. So you had things going on. Grain dealers were suddenly rolling their basis bids to sharply discounted deferred contracts relative to the higher volume May contract. So talked with people that indicated that their basis was that they may have had a bid for July, but it was priced off the September contract. And of course, you saw those carries in that early slide. So that affected the price that was offered. So selected grain dealers and some were not posting any bids for hard red, citing current high prices as a reason. And some wheat millers saw the high prices, and I put temporarily because it has to be temporary because they can't do it forever. They stopped accepting wheat deliveries, deciding to draw down inventories. So we're focusing on wheat here, but you saw those other commodities did the same thing. They also dropped their basis bids. And so so what happened on Tuesday the 8th followed the volatility on Monday the 7th. And you can see that the change that happened. I see the change in the upfront months, March, May, et cetera. But look at the change that happened in those contracts in the deferreds. July up 59 cents, September 75, Dece 85 cents, 83 March 23, and then it declined some, but still strong. And you saw the carries, particularly in those deferreds. Those carries are on a per month basis. So then by Thursday, you can see that the market had receded some. July was 12.33 on the 7th, was 10.85. It dropped about $1.70 some cents, I think, if I'm thinking off the top of my head right. And that was on a day that was up 30 cents. So volatility and the carry had adjusted also. So why did this happen? And well, the inverses, the record high lead contract prices for the lead, the symptom blamed for soft red and for hard red winter wheat. Record high lead contract prices, lead futures, high volatility. So down, at least if you talk with people in the industry, Brian Brighman's talk, there was a roundtable forum of millers, et cetera, and that happened in Kansas City later that week, indicating that in a lot of cases, the folks that the elevators were going to sell to had vacated the market. So lack of bids for from wheat millers, from exporters, et cetera, really, and questions that had come up. Guy Allen, my good colleague out of IGP, discussing how that there were bids, and where there were bids, it was very difficult to get any rail transportation to even get there. So we were kind of at a mode where, because of the volatility, the system kind of froze up. So if the system freezes up, that's fine, but eventually it just brings about a necessary turnaround in the future. So eventually these downstream buyers, users are going to need wheat supplies. We're going to have demand pull. We'll force these folks back in the market, particularly on these some active export markets. So when buyers come calling, we'll have to get back into those markets. But that doesn't lessen the angst and frustration if you're a seller so on the one hand, you've got great prices, but there's the regret of seeing such wide basis bids that now have come into play. So anyway, with that, Sandra, I think I'm on time, surprisingly. So let's go to chat and see if we have any questions I need to address.
Okay, yeah. So if Stacy could come on, Stacy Campbell, I think he's going to address questions for you if there is any.
Sounds good.
Okay. Yeah. Thanks, Sandra. Sure. Yeah. And I think Aaron had put that in the chat in the Q&A, but if you've got any questions, feel free to type those into the question and answer box or into the chat box too. We've got people watching for those questions, and Dan is still available to answer those questions.
I guess while we're waiting for questions to come in, I'm going to go ahead and ask a quick one, Dan.
Hey.
We're talking about everybody re-entering this market, and I know you said it was temporarily is the word you used. What do you have any idea what type of a time frame we're looking at for this?
You're breaking up there, Jeannie. I didn't hear you very well. I heard you perfectly fine.
Sorry, I asked a question you don't want to answer, and I completely
I think that I
don't have
understand,
a good feel for that.
I understand that the millers have probably substantial supplies. I don't know if it's years worth, but it's at least months worth. But how comfortable? But so they can take their supplies down. But yet in these markets with what's happening in Ukraine and Russia, how comfortable are they in letting their stocks get lower? And not being proactive and trying to stay up with this. So the export numbers are indicating that there's movement. There's something happening out there, especially for corn, for soybeans, and now were those just accumulated stocks that people in that export elevators in position had to go with? We don't know, but when you look at soybeans and Brazil's South America's problems, they're going to keep that flow going. They'll have to come back out to the country to buy soybeans, and they're going to have to come back out to the country to buy corn. Grain sorghum has recent decent pace. They'll have to come back out the country to buy that too. And when the buyers in this system that when they come to the elevators and say, hey, do you have any grain? When the elevators say, hey, we'd like some grain, then in that arbitrage competitive environment, they'll have to narrow up the basis, because I think they'll have a lot of farmers seeing what just happened, and they're not going to be that anxious to just give it to them. So the time frame, perhaps for grain to move, before the next harvest, is that a matter of just of months, rather than half years and years? I think we've got needs that'll come in quicker.
Thanks, Dan. I didn't mean to.
No, that's the question.
Right off the bat, but in my
that's the question people are wanting to ask, so that's fine.
Right. I was sitting here thinking about all the questions that someone may have in their mind, and that's what kept floating into my mind, is how long to think about when things are entering and how long of volatility, because it seems like if you look away from the markets for 5 minutes right now, it feels like you have missed something.
We ran into a situation here. The fellow's probably not on this phone call, but it was winning the game webinar. I think Sandra may have been in on that one. Anyway, where we had a person say that they had followed the rules, they had hedged July wheat, and they had a hedge. Of course, the price had gone up, they had margin calls on it. So, but yet, so they were planning on delivering grain in July, that they would harvest for their wheat. But then now they came in. Now their elevators have said that they can get a price in July, but it's going to be based off the September contract, which is discounted. So we really struggled with what to tell that person. And my first thought was, well, get out of the hedge, but that's the wrong answer. I think you need to follow through, because cash prices are doing decent. It's just that the basis has suffered about, it's probably 50 to 75 cents worse, but yet still get a price that's a great price historically. But his reference, this person happened to be a fellow, his reference of what the basis was 40 under or 20 under. Well, now he's paying $1 some under, and there's a lot of angst is a polite word for what that person was thinking. So,
Dan, I have another quick question. At that marketing meeting, or I think another producer I was talking to, what is your recommendations on contracting out more than a year? I mean, at least one more year, because I mean, these prices are unheard of for wheat. And some people are forward contracting as much as the guarantee of their crop insurance would cover.
yeah.
So I don't know what you think about that, but I was kind of surprised that some producers are thinking about doing that.
Well, they had best. I would typically my own thought is that I've always been wary of recommending someone go 2 or 3 years out. But what they're thinking is, well, these are historic highs. And if I forward contract or hedge at that far out, then yeah, I'm probably given that markets will probably come down later, if things return to some type of normality, they'll make money. But the thing that's always made me clutch on that is what could go wrong if they're hedging, and they would really need to have a lender that understood what hedging was, because there's the possibility of, what if there's the possibility that these high prices could stay around. If you have crop loss now at the wrong time, where do we go for wheat prices? Where do we go? So I would wonder about if they're hedging going out that far, they're going to be carrying they need to be, quote, well capitalized, or have a lender that really understands what's going on, or is if it's being financed, someone probably get cold feet. This is what the elevators find, when they finance forward contracts, when what's just happened comes about, then the people that loan them money say, gosh, you have such a large line of credit on these forward contracts that we're not sure we're going to carry them. So there's finance risk on both sides. If they forward contract, then there's a lender on the side of that's financing that co-op elevator or whoever it is that has to, you have to trust that they won't get cold feet that far out. And you know what? I remember I'm old. I'm seasoned enough where I remember the hedge to arrive crisis, Sandra, in the past. And what happened there was that the people that loaned the money to the elevators said, no moss, this is too much. So they had to get out of those situations. So get out of those, and a lot of people lost a lot of money in that. Some lost their farms out of it. So somebody's going to that's what I come down to. Somebody's going to carry those hedge accounts, either the farmer or the elevator, and you if you're going to do it, I would do it with someone that you're really comfortable is highly capitalized, that not isn't going to get pushed out by whoever's financing. So you asked me a straightforward question. I talked for 5 minutes because it's a tough one to answer.
It is. Okay, thanks, Dan.
Well, and I don't see any questions that have came in. Now I'm not for sure about YouTube. Aaron or Craig, do we have any questions from YouTube?
No questions on YouTube that I'm seeing.
Okay.
Yeah, I can add one thing in. Right now we're looking at it probably behooves people to figure out when the next numbers are going to come out that could lead to market volatility. Here at the end of March, there's a prospective plannings report that'll come out that has a lot of potential to move the market on its own. Farmers they were surveyed around March 1st, and with the idea of saying how many acres of corn, how many acres of soybeans, how many acres of grain sorghum, sunflowers, you name it, that they're planning on growing. But so now, given the algorithm-driven state of the markets, a positive or a negative signal out of those can have an impact on where prices go. So I would that's probably the next government USDA government report that I'd be watching for, the prospective plannings report on the very last market day of March.
And for some reason, it made me think too, Dan, just a plug. You guys did the Ukraine-Russia conflict and ramifications to the agriculture industry community. If anybody's interested and didn't listen in on those, there was 3 different webinars last week on Monday, Wednesday, and Friday from 12 to 1:30. You can go onto the agmanager.info website and find that information and listen to those.
In a feeble attempt at humor, Stacy, we haven't, and what we said in there hasn't led anybody to want to hang us an effigy yet. So it must have made some sense. We're still here to talk about it. So
good. Well, I think with that, still don't see any further questions coming in. So, and it's almost 1 o'clock, and we know everybody's weather's pretty nice out, so they probably got things to move on to and do. Dan, we appreciate you very much jumping on and doing this. I don't know, when the markets get like this and input prices, you kind of think of these are the best of times, and they could be the worst of times, kind of depending where things go and how you look at things.
This year is a great opportunity for Kansas farmers if we can just grow a crop.
Yeah,
if we can just grow crops, we've got a lot of revenue potential.
And Sandra had mentioned that. Just keep in mind, if you do, I hate to even dip my toe into the marketing deal, but you do have crop insurance to help kind of guarantee you some bushels, some yield there if you do try to do a little contracting. So you be sure and visit with your crop insurance agent. You can utilize that tool to help you in doing some forward contracting in these great prices. So anything to add there, Dan?
Nope. I think that was a good point earlier, and I hope we addressed it well.
Okay. All right. Well, with that, I think we'll go ahead and finish this out. We do ask, if for those of you that are still with us, it looks like about everybody is, if you would maybe just take like 2 minutes, and we have a little survey at the end that we'd like for you to fill out. And I believe the link's going to be coming up on that here in the chat box, or maybe here on the screen in just a minute. And so we do ask that you folks do those surveys, if you would, please. That really helps us out for a couple of reasons. I mean, just to see if we're kind of on target there, but also our funders, our legislators, and so forth like to see if we're making a difference there. So we appreciate you doing that survey. And if you're a CCA person, you do need to email jfalkjones@ksu.edu as soon as you can with your name and your CCA number, so you can get credit for that as well. And there you go. There's the survey. We do ask, if you've got a QR on your phone there. You could pull that up and hit the QR code there, the picture of it, and jump right in there. And it should just take you a couple of minutes to do that survey. If you would, please do that. We'd very much appreciate it. And also, if you want to go back and listen to this session or any others, we've put that information out there. You can just go to that www.northwest.ksu.edu/events. You don't necessarily have to type the rest of that in. If you'll get into there, you'll be able to scroll, I think, about partway down that page and see where we've got the recordings and handouts posted for all the Crop Talk webinars. And I think we even have them. Maybe I shouldn't say this, I can't remember for sure, but I think we've got them posted from last year too. So you can even look and see what we talked about last year. I guess you can compare notes and see if we're still lining up or not. So anyway, with that, we thank you folks for joining us, and we hope that you have a rest of the good afternoon.
Hey guys, thanks for having me on. Thanks for having me on. I appreciate it.
Thank you, Dan.
Yeah, thanks, Dan.
Take care. We'll be in touch. Bye.
Okay, see ya.